Assalamualaikum and hi everybody. This is Emma from Emazol and Finance. In this lesson, I'm going to share with you topics on savings institutions, credit unions, and finance companies. In this lesson, I hope you will be able to recognize the difference between them, describing the credit unions and discovers major types of finance companies. In between the topics, we will see their assets and their liabilities. Before we go further, let me just give you examples of companies in these three lending institutions. In Malaysia, we do not have savings company. The service is offered under commercial banks. In the USA, there are many savings institutions. One of them is Bath Savings. Under credit union, Malaysians know them as Koperasi. And one of the biggest koperasi in Malaysia is Angkasa. I am sure you noticed that schools, universities also have cooperatives. They are credit unions. Under finance companies, one example that we have in Malaysia is Maybank Finance. While Maybank Bank provides depository services, Maybank Finance focuses more on giving loans to individuals and businesses. For savings institutions, they could comprise two groups of depository institutions. First, savings associations, and second, savings banks. Savings associations were historically referred to as savings and loan associations. Both groups specialize in long-term residential mortgages, which are usually financed with short-term deposits of small savers. Unfortunately, saving and loan institutions have had a major crisis during 1982 until 1992. It started in the mid-80s when real estate price collapsed. Due to that, many could not pay the home loan to the savings institution. Instead of mitigating the risk of insolvency, federal insurers of saving institutions maintained their principles. They did not want to close the troubled saving institutions. As a result, around 1,248 savings institutions went for bankruptcy. This crisis lasted for 10 years, and in that period, the industry has lost about half of its assets and savings institutions. What caused this crisis? It began before 1980s when the US Central Bank put new policies which causes real estate industry to decline. What happened was Federal Reserve has increased its charges on reserves put by savings institutions. The sudden surge has caused the interest rate to increase, and this caused a burden to savings institutions since now they have to face negative net interest margin. While positive net interest margin suggests they operate profitably, negative figures implies investment inefficiency. When this happened, saving institutions failed to meet the QTL test and they did not qualify as institutions which could take deposit. Assets and liabilities in savings institutions are more or less similar to assets and liabilities in bank. Credit unions, or in Bahasa Malaysia, koperasi, are non-profit depository institutions. They are mutually organized and owned by their members, that is depositors. It was established as self-help organization first, before operating as lending institutions. The money deposited by members are the funds lent to other members. Credit unions are not allowed to provide services to general public. They only serve the members, and these members are required to have a common bond of occupation, association, or even a kampung. Since credit unions are non-profit organizations, their earnings are not taxed. They are allowed to offer higher interest rates than commercial banks on deposits and charge lower interest rates than commercial banks on loans. In Malaysia, Our credit unions are monitored by Suruhanjaya Koperasi Malaysia or Malaysian Cooperative Commission. Among their functions are to maintain the stability of the sector and act as a trustee and administrating any Islamic financing facility. Similar to bank and savings institutions, their assets and liabilities components are about the same. Finance companies. There are three major types of finance companies: sales finance institutions, personal credit institution, and business credit institution. So what are their differences? Sales finance institutions specialize in loans to customers of a particular retailer or manufacturer. Personal credit institutions specialize in installment and other loans to consumer, like providing loans for home or automobiles. Business credit institutions specialize in business loans, especially through equipment leasing and factoring. Asset components in finance companies are a bit different from bank, savings institutions, and credit union. Why? If you notice, finance companies do not have government securities. They depend on the account receivables from consumer, business, and real estates. Sometimes finance companies give loans to riskier customers at higher interest rates than commercial banks. Normally, those rejected by banks will usually come to these finance companies to borrow. These dangerous finance companies could be subprime lenders finance company, loan shark or Along, and payday lenders. Subprime lenders are willing to finance individuals who even went bankrupt. They normally charge very high lending rate. Loan shark, Along, targets desperate consumers. They charge up to more than 30% per annum. And you know what happened if customers could not pay back their money. Well, let's not talk about it. Payday lenders provide short-term cash advances, and they usually offer it when people get their salary and borrower needs to pay back on the next man's salary plus the interest. Finance companies have advantages over commercial banks with respect to business loans because they are not subjected to regulations that restrict the type of products and services. They do not even accept deposits. Accordingly, bank-type regulators do not monitor their behavior. They often have substantial industry and product expertise, and they are more willing to accept risky customers, and they generally have lower overhead than commercial banks. So before we end these lessons, let's recap. Three non-bank lending institutions are savings institutions, credit unions, and finance companies. In the US, when a person wants to get a home loan, they usually go to savings institution. Credit unions are for members only. And three types of finance companies are sales credit, personal credit, and business credit financing. And also don't forget, desperate customers could go all the way to higher risk lending institutions such as subprime lenders, loan shark, and payday lenders. That's all for now. See you next time.